Capital. Glad to be with you this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. It is Friday, February 2nd, 2024, non-farm payroll day. Welcome aboard. Glad to be with you. If you haven't already, make sure to hit that like and subscribe button so you don't miss any of our videos. I'm going to do the recap of the week this week today. I'm going to do it after the bell since it's fresh in our minds so you guys can watch and recap the week with us. So obviously, we're just getting started on a Friday. We had a very choppy yet grind higher week, up and down, back and forth. A tough one all around. But today is another day. Get an opportunity to see what this market can give us. Maybe we get a little momentum today as we're starting to bounce a little bit after non-farm payroll report. That was the big number today, was the non-farm payroll report, guys. That's where we're getting a little bit of volatility. That dropped from 49.64 on ES, S&P 500 futures to around 49.28 or so. Right now, let's go ahead and go around the horn. Again, if you have any questions, guys, there's the chat box there. Feel free to ask your questions. Here to help in any way we can. Dow futures down 126. S&P 500 futures are green. It was just red, 0.07%. NASDAQ up 0.40%. That's Meta and Amazon. Meta soared after their earnings. They reported a dividend, which is the first time ever, and a $50 billion buyback. Meta is absolutely on fire, broke all-time highs. I mean, what more can you say if you're a shareholder than awesome? That's really all you can say. Meta was not an easy hold over the 2022 period, as we know, but Metaverse/Facebook seems to get their act together. So congratulations to the shareholders there. Russell futures down about 1% this morning. 10-year treasury yields are up back above 4% post non-farm payroll. The number is scrolling at the bottom here on the ticker. 353,000 jobs added versus the 216,000 jobs previous. Excuse me, that's the previous one. The estimate was 185,000. So almost double what the expectation was. It's a very strong labor market. And the reason why stocks are falling, guys, in regards to the labor market and, people working, how is that bad for stocks? It really just kicks the can down the line for a possible future rate cut. We're not going to get one in March. Even I said that's way too optimistic. The best bet for the Fed is that things go well and they don't have to cut. Remember, cutting would either show massive deflation, acceleration of deflation. Again, one thing is falling inflation. The next thing is deflation. And how do you get deflation? Less people working, less demand. The good news is that we have good retail sales numbers. Airlines provided great guidance, great reports. Amazon showed retail sales are strong. That's why they're up this morning. Cloud even missed expectations for Amazon, and they're still up. So new all-time highs in the stock prices. We also had an unemployment rate below expectations. 3.8% was the expectation. We're at 3.7%. Participation rate at 62.5 came below slightly on expectations there. That's for participation, but 3.7% unemployment. We just had a GDP now reading yesterday from the Atlanta Fed, and their expectation on a quarter-over-quarter growth, which is Q4, is now at 4.22%. So things are improving. That's a really great sign. Right now, the real big issue for the market, or what they're really looking for, is when is the rate cut's going to happen. We're not going to get them in March, so that's the next meeting. After that, it would be May. Does May get one? More than likely, if we were, it would probably be in the summer. Probably around June is my expectation if we were to get there. The only caveat there, guys, in terms of when the Fed would cut rates sooner, would be if the labor market starts to crack. We're starting to get layoffs. That takes time to funnel through the system, but it's kind of hard to cut rates when you have 353,000 jobs added for the month of January or the month of December, since we're 1 month behind. Or January, excuse me. This is January numbers. My apologies. With retail sales up again, guys, cutting rates is inflationary. They can't do that. Not right now anyway. So what do we do with this information? Well, crude oil is down. Gold is down. Really, the dollar spiked up higher post NFP. What do we do here? Let's take a look at the S&P 500. So this is kind of a mixed bag at this point. Yes, we're happy that we hit all-time highs. Yes, we're happy that people are working. That's a good sign. Do we buy this dip? Think about this for a second, team. What else can we throw at this market? We had a more hawkish than expected Fed. We bounce off that. Earnings have been very solid. Earnings across the board, I think it was about 78% beforehand, before these earnings that just came out yesterday, beat their estimates. So we're getting strong earnings. The question is, does it continue? Do we get this retest back to previous all-time highs? Do we bounce from there? Very tough sledding. Even with rates being elevated, this market is very resilient. So we're just going to take our time. For the time being, as of right now, it seems that it's just a buy the dip market. So we'll use the data points that we have in front of us to do the best that we can moving forward. And that's really all we can do. This idea that we got to pull back now maybe gives us an opportunity to buy this dip moving forward. But we need to see the open all across the board and see if we get that sell off that we've been getting at 10 a.m. recently. So we'll see what we get. We'll see what we get. Let's take a look at Meta. Again, Meta's now at 460, above all-time highs. Kind of tough to trade that, obviously. Amazon, now at 169. We filled that gap. We're right near the highs from 2022 of March. So nice round trip for Amazon. It is not at all-time highs yet. We're right at 170. That might be resistance for the time being. I fully expect us to pull back at least just a little bit after this move to get us to 163.35. That would be our support moving forward. So Amazon looking great. We finally got that gap fill. Unfortunately, we were just a week too early on that trade. So it seems to be kind of the deal now. 1 week too early. Last couple of sessions that we've had. So we just keep it moving, keep trucking, and see what we get moving forward, guys. We also had a setup yesterday on Qualcomm, and I did not send that out, unfortunately. And the reason being is that we started falling first thing in the morning, right around 9:25, and I wanted to play that short. We haven't filled that gap yet on Qualcomm to the downside, right around 139.25. Unfortunately, we just missed that. I really wanted to short yesterday, and they didn't have the volume either. So let's see if Qualcomm finds some support here at 139.37. We can play calls if we hold that level right around 140, maybe back to 145, which is that gap fill there. So up and down, down and up. The question is, does it hold? That's what I'm looking for Qualcomm moving forward. Let's take a look. Good morning. Good morning. Mara. Yep, I still have Mara calls. We were in the money. Again, this would be the 5th day in a row. Imagine that. 5 days in a row. 1, 2, 3. Thursday, we were very close. 1886. That is now, we're in that zone 5 straight sessions. We're going to keep knocking on this door on Mara, guys. I still fully expect us to go higher. The 1 hour chart, golden cross. 50-day over the 200-day. This is why I have time. We were right at 1903 this morning, and then we pulled back with non-farm payroll. Let's see if that dip gets bought. And in terms of Bitcoin, yep, the dollar spiking did hurt, but it seems that we're just in a consolidation phase around 42,000 currently. We keep knocking on the door above 44,000. Eventually, we're going to break there. So the question is, when? That's the question. Just when? DraftKings, I have the target at 42.02, but on the daily, it's breaking out. I've been looking high and low for volume, and there hasn't been any. Really ahead of the Super Bowl. We know that February, seasonally speaking, DraftKings is very strong. So we just need to find a move that we can chase in terms of volume. And right now, we don't got any. So I'm looking for anything past the Super Bowl date. That would be, I believe, the 16th of February. That would be those calls. But they don't have any volume. And that's that's kind of a pain. The 16th of February is kind of the strike that we're looking for. Tesla puts below 182.50. Oh, below 184. We still have that gap above there. Really, to short, we got to get back to 180. That's really the only place I can see where we can start taking a look at shorts. And right now, we're just consolidating. So we're still waiting for 196.51 to play that gap fill. Morning IWM chart is still lagging. Yeah, it's pulling back today. And again, you're retesting this trend line. We did retest it and we bounced. We're now at 193.68. Really just got to hold 193 so it can hold this trend line to the upside. And so far, so good. At least it's just holding on. Just a lot of chop. Very slow grind higher with no momentum, which sucks. And the only momentum we got was with earnings. And that's when the market's closed anyways. SMCI on fire. 594 up this morning. 600 seems to be that R, at least for now. If it breaks 605, then it can go as high as the imagination takes you. It's just an expensive option. That's really it. But semiconductors, yeah, I mean, we know that nothing's pulling those things back. I was looking at AMD for a possible short below 164.54. Never got there. Never got there. So let's see if we could get a break higher on AMD and ride the momentum post earnings. Let's see the daily. Any gaps to fill? No. Well, 175 would be the next target, but let's see if we break 176.48 and see if we can target back to all-time highs on AMD. But it's all predicated on volume, guys. Right now, I hope there is some out there. It's not like we have a short week or anything coming up. President's Day is not for another 2 weeks. So we're going to see if the market buys this dip. 17,500 is what I'm looking for on the NASDAQ. That was a level I was watching for yesterday. Then it just sliced above it towards the tail end of the session and then the earnings. So let's keep an eye on NASDAQ today. I'm keeping an eye on Qualcomm today. Apple, unfortunately, yeah, the one stock that I picked, guys, out of 3 stocks that were reporting, Meta, Amazon. Well, Amazon, we were a week early, and to play the earnings, we knew the gap fill was coming. It was just too expensive and just too much risk on the board. But Apple falling, unfortunately. And that one was one that I thought we would get that move, and we didn't. So tough sledding there. Apple has been good to us this year. That was the first loss on Apple for 2024. And I hope it's the last one because that one was frustrating to hold. Shopify did bounce because of Amazon. It is up about $4 this morning. Let's see if we get 84.31. Crazier things have happened to Google in October with NFP. So yeah, I've seen stranger things out there. Definitely. And if you are holding Mara, which I am, again, I'm still going to update everybody. All we are is chopping around. We were at 19 and now we are. So at 1828. AMD never going down again. The famous last words usually. But hey, if it stays up, it stays up. I'm all right with that. No problem. We'll trade it whatever direction we get with some volume momentum. I'm ready to go. But it's just the best thing about this week, and the only silver lining is that we didn't press the issue. Again, we're just going to wait, and we're going to wait for high probability setups. We're not going to revenge anything, even though it's been a rough stretch. Again, we're going to wait. We're going to be patient, and we're going to see what we get. And that's all we can do. And I wish everyone a happy Friday. I'll catch you guys for the market recap later today. And have a great Friday. Let's see what we get today. And keep it locked on the blog. We'll update you with any other news that comes out. See you guys later. Cheers.